is a hot topic that we're fielding hundreds, thousands of calls on. So I think there's a bit of kind of misinformation out there and just concern and questions on how does it work. And so certainly could take a couple minutes just to explain what it is, how it's being implemented, who it's for, and if you need help, how you can get it. So it is not a government program. So I think that's the first thing that's important to note. This is being done by the banks and lenders. The big announcement came out last week. The big 6 banks would be offering up to 6 months worth of deferral. But everything is viewed on a case-to-case basis. And it's not just the big 6 banks. Essentially, every lender in Canada has got some sort of strategy around this, knowing that there's going to be economic hardship. There already is economic hardship as a result of COVID-19. So the first thing I want to say is that it's primarily for owner-occupied properties. We are not seeing a lot of information regarding rental properties at this point. But if you have a rental property and there's an issue on it, that doesn't mean you can't reach out to a lender for looking at if there is an option. So a lot of banks and lenders have like skip a pay options where you can just automatically skip a payment. It's a very simple process. This relief is more so not just doing that, but that you are at risk of not being able to make your mortgage payments and you need, a better plan than that. So again, everything is case by case. So you're going to actually have to connect with your bank or lender. They are going to assess your situation. Like if you've actually lost a job because of it, there's a much better chance that they're going to say, yes, you're going to be eligible for this. It's not something that they're giving out just because you don't want to make a mortgage payment. So the other factor on it is that they are very overwhelmed right now. So if you are not at immediate risk, it's going to be difficult to get through. So the biggest advice I can give to anyone is you want to reach out to your lender directly, or if you're dealing with a mortgage broker and you're not sure who the contact is with the lender, you can reach out to them. They can direct you to the right source. And a lot of lenders are now adjusting their systems to make it a lot more easily accessible online, where you can actually just fill out a form, because their phone lines have been essentially overwhelmed for the last week. And so calling them is not an enjoyable process for anyone. You're on hold, you're not getting answers. So the big thing is if you do have, a mortgage payment that you're going to miss in the next 7 days or April 1st or anything like that, to reach out to them, explain the situation, and the programs are there. So that's kind of a starting point of it.
You had mentioned about landlords there and how predominantly the program was primarily set up or has been put in place for principal resident owners. Do you think that I saw a clip yesterday that Scotiabank will entertain interest relief or payment relief for landlords? Do you expect to see more banks coming online accepting applications for relief for landlords?
Yeah, I mean, I think April 1's going to be a big day to see what happens, because I think there's frankly just going to be a lot of rent checks that don't clear for all sorts of legitimate reasons. So this is a moving target. I think you are going to potentially see programs get adjusted. You're going to see potentially something come out that's beyond just the banks and lenders offering it. We don't know. We don't have information now. But with how things are going, I think that's probably the course of action they have to take, because this isn't just a homeowner problem. If you have multiple rental units that aren't paying rent, a landlord's going to be in a tough position too. I think there's a bit of a misconception out there that all landlords are, super wealthy and this isn't impacting them. And that's not the case. There's a lot of people that maybe have 1 or 2 rental properties and it's just part of their, portfolio, but they can't afford 6 months of not having rent. So I think you are going to see that kind of stuff come to light, but we don't have updates on that at this very moment.
Yeah, I saw Service Alberta get fairly proactive today. Jason Kenney came out and made the statement that, in lieu of what's happening here during COVID-19, that landlords are going to be allowed to continue business as usual. So, if a tenant is not going to decide not to make payments, the eviction process is still eligible, and they're going to allow it to proceed. So I think it's positive, but I think the biggest thing is always communication, right? Whether it be with your lender, or your landlord, or whoever you're working with there. You had sort of touched on going to your lender's website if you are considering doing a deferral payment plan. Is there other sites that you might recommend that would be good for people to go to as well if they want to really entrench themselves on more information?
There's not at this time, I would say, like a generic overwhelming option. So there's like our company, Mortgage Connection, we certainly have been pumping out any information we can on social media. So you have it, but there's, just because every program is lender specific and case by case specific. Again, it's not like a government payout that's come into place. I think you could see changes, and there is more government intervention. There's not really a standardized form, but what I can do for you, for sure, is I can send you. We've got a very good breakdown of kind of what the process is. It's like a one-page setup that kind of covers any lender out there and how the process would be, and we can certainly connect that with you so you can share that with anyone that has interest, because they're just, again, things are changing so quickly. There's not like a standard government page that has information that's really that helpful, but we've got something put together that we can send you at the end of it.
Okay, excellent. What about lines of credit? Is that applying to lines of credit as well?
Yeah, so if you've got a secured line of credit on your house, a lender's going to view that very similar to a mortgage. It's got a minimum payment that's interest only, but you still have a debt obligation that you have to pay. So it's registered like a mortgage charge against your house. They're not going to view that differently. It's worth reaching out if you have the same thing. The one thing I will note on lines of credits, though, the only kind of positive on this, if you have a line of credit, or if you have a variable rate mortgage that has a trigger that actually adjusts the payment, you are going to get some payment relief come April, just because prime has dropped a full percent. So a lot of people aren't cluing into that, and it's not relieving the whole payment, but your payments will go down come April 1. So keep that in mind if you do have a line of credit or a adjustable rate mortgage that shifts if prime moves. You are going to see a lower payment come into play as of April.
With people that have got lines of credit or have mortgages coming up due for renewal, or possibly looking into mortgages, we'll come back and circle on the relief, but I got a couple questions, but you sort of segued into this.
Sure.
What are you sort of recommending to your clients right now, variable versus fixed? Are you suggesting that people be trying to negotiate variable rates with their lenders? What's your position on that?
Yeah, so in all of this, kind of another big thing that's come out is that interest rates are falling, and for a short period of time, that certainly was the case. So about a week ago, we saw significant decreases in fixed rates. We also have seen the Bank of Canada do a couple of emergency cuts, so they lowered the overnight rate, which in turn has been passed on to the prime rate. So you've seen a full drop of 1% in the prime rate. That all sounds like good news, but what has also happened at the same time is the markets have become completely volatile and unpredictable. So lenders have added risk with defaults happening. They also just have access to capital that has been shrunk. So we've actually seen interest rates rise very quickly in the last 5 days, which I think in general people aren't realizing. So fixed interest rates have gone up a full percent almost in the last 6 days, and they're moving every day. So if you have a mortgage that's coming up for renewal, let's say in the next 4 months, or even in 6 months, or even this year, it is a good time to just see if you should be doing something now. That doesn't mean you have to pay out your mortgage, pay a penalty or anything like that, but you could secure an option at least to protect where rates are today, because we don't know how this is all going to play out. It could settle back down and we see rates drop again, but with what's happening right now, we're seeing daily increases. At the same time, with variable rates, although prime dropped a full percent, a lot of the discounts lenders were giving off prime have evaporated. So, a week ago you could get prime -1. That same product now is prime. So it's really just a moving rate market that I haven't seen in 18 years. Even when we had the financial crisis in 08, we didn't see rates do this quickly. We saw it happen similarly, but not this fast, and not a huge drop followed by a huge rebound up. So it is a good time to be reviewing your mortgage if you have a renewal that's coming up, or if you're in a rate that's maybe a little higher, it could make sense to get out of it. But like fixed versus variable, it's really a choice on the person's comfort level. But I do think it's really important right now that if you have a mortgage coming up in the next 6 months, you get something locked in price-wise. If rates go down, you're going to get the benefit of the drop anyway. And if things are going the wrong way, it's going to look like a pretty good decision to at least have secured something.
So lock-ins you're doing them up to 180 days now?
Yeah, so you could secure something as long as that. Standard with most lenders is 120 days or 4 months, but we do have longer term holds as well. And it's just one of those things where we don't know where things are going to go. So for anyone that's kind of coming up in that period of time, starting the process now is probably a capital idea.
Sure. So I was talking to another agent who's got a client that works for Equifax. He had mentioned that the banks are not disclosing that by deferring payments for extended period of time, that it could be affecting your credit rating. Truth or fiction?
Half truth. So a lot of this stems from a bit of an issue that I think where we really saw this come to light is when there was the Fort McMurray fires. They had a similar program for payment relief that the banks are talking about now. And some of those deferrals actually led to it looking like you had actually missed payments on your credit report, which no one was aware of. So it definitely hurt your credit. We have been told that they are not going to be doing that now, and that if there is payment deferrals, it will not hurt your credit rating. So we haven't seen any yet. We haven't obviously pulled credit to verify that that's the case, but this was a big concern that anyone in the business had, because we had seen a similar action a few years ago that led to damaged credit as a result. So we've been told that that's not going to be the case, and they're just going to view this as you're making your payments regularly. It will report on credit as such. So hopefully that what we're hearing is the truth.
Yeah, and I think maybe as a precautionary measure, write your MP and let them know that this could be a concern, and
Right.
Nobody wants their beacon score affected. So yeah, okay. What about property taxes, where people have got that included with their deferral? Are people still responsible for the property taxes, or is that part of the package as well?
So again, a lender could certainly include that as part of it if they're saying your principal and interest and taxes are part of our payment. They like when a lender's collecting property taxes, they're essentially just collecting a pool of money that they're then paying the municipality at the end of the year. So in general, they probably don't want to not collect that, because then there's going to be a shortfall. But I can see a case where a lender would certainly say, yeah, we won't make you pay that either if we're giving you a month off. And then they're just gonna, I think what's key for everyone to remember is that this isn't, you're paying for this eventually. So they're either gonna, re-am your mortgage out with a higher balance that you're paying, or change your payments 6 months from now, or a month from now, or 2 months from now. But that could be relieved. We're also seeing some indication that we might see some tax relief period from the municipalities on at least the commercial side and potentially on the residential side. So if that happens, then I think that would just become a non-issue anyway.
Mm-hmm. Mm-hmm. So what about if somebody's already skipped a payment this year? Maybe they were laid off last year, they're going through some hardships right now. Would they still qualify if they've already gone through skip a payment or deferral?
Yeah, so like there's a couple different things. So some lenders just have built in that you can skip a payment like once a year anyway. So if you have that, you can do that without much concern. If you've already used it for your year, then you would have to be going to the lender regarding this actual like COVID issue. And it doesn't mean they wouldn't allow it. Again, I think they would review it, and very much so it's, do you need it? So if you have been, if you have lost employment that's a direct result of this, so you worked at, I'll just use an example, like you worked at a dentist office as a hygienist and you cannot work now. You have a much better chance of them understanding that there's no income coming in. And whether you did a skip a payment last year, regardless, isn't going to impact the ability for them to consider it again.
Mm-hmm. Along the same lines, then, if a client chooses to skip a payment now, just for a month, and then they determine maybe in 3 weeks, depending on how long this goes on, of course, would they still be eligible for the additional 4 or 5 months on the deferral program if they've just only elected to do the 1 month?
Yeah, so I think the other important thing to realize for everyone, because I know there's some panic, I need to get this right away, even if I don't need it now, because I'm worried I might need it in a month. Like, this program isn't going away. As soon as it was announced, it was very clear that they're keeping this open until at least September. So if you used it now and then things seemed okay and then it didn't get better, there's nothing that's saying it's a one-shot thing and that you couldn't come back and try to get help again. The bottom line is lenders don't want to have you be defaulting on your mortgage. They do not want to be foreclosing on properties. They're not even in a position that they could if they wanted to. The courts aren't even open. And they're not in the business of foreclosing on property. So they're all going to be willing to work with individuals. It's not an overarching program. So it's, again, just everything is case by case, connect with them. And it's not like you're going to shoot yourself in the foot if you skip a payment this month and then realize 3 months later that things have gotten worse for you because employment hasn't come back and you need help again.
Yeah. No, it's good information. Anything else come up today or yesterday that maybe I'm not aware of that is worth sharing right now?
Yeah, I think just from the mortgage side, the big thing that I think a lot of other people have concern on, we're actually going to do a video kind of series on this today too, is just what happens if I'm mid-transaction and something changes, and what should I be doing? And we're also seeing a lot of moving parts on how other partners in the industry are dealing with things. Like, a big thing is appraisals. We're seeing a big shift that appraisals are just being removed as requirements from a full appraisal setup. Most are being done as like desktops or drive-bys. Most lenders are moving to, the banking world's a little behind in digital signing, which is kind of crazy to say in 2020, but most are moving to full acceptance of that, just understanding that that things can't be done. And I think where you could see another kind of phase come in is, how are lawyers going to close transactions if there is like a full setup where face-to-face meetings can't happen anymore. So those are all moving targets we're seeing news on all the time. So appraisals kind of came out earlier this week. And so kind of the landscape shifting on how transactions can close. The other thing that I think is really important, that lenders are viewing job loss differently right now than they would if it was a normal condition. So where I would have some advice for people is, if you've been temporarily laid off, it's pretty important that you let, like, if you're a client of mine, I'd want to know that, because a lot of lenders are actually going to view that differently than they normally would. They treat it maybe like if you were going on a maternity or paternity leave. If you're in a job that should come back once this crisis is over. So just if there's any changes, it's important that the communication's open, just because the last thing we want is someone thinks everything's done. They go to finalize things on waiving conditions or with lawyers, and new information comes to light that could have been dealt with. So those are big things for us. We're communicating with banks and lenders all the time on, how are you dealing with someone that has temporarily been laid off? How are you dealing with rechecking employment, that sort of thing? The reality is, lenders want people to get the homes that they've approved them for. So I just think it's important that the communication lines for mortgage brokers, realtors, lawyers, and borrowers and buyers are pretty open throughout the process, because just because a change has happened doesn't mean you suddenly are not going to be able to close on the transaction you're in.
Learn to Zoom.
Yeah, and you learned how to Zoom. Yeah.
Similar to learn to code there. Awesome information, Joe. Really appreciate you giving us your time. I know it's pretty valuable these days. So
No problem, guys.
yeah, Joe, if they've got any, if anybody's got any questions, you know, they're looking for some advice or, you know, refinancing, something of that nature, how do they get a hold of you?
Yeah, so email's just joe@mortgageconnection.ca, or they can reach out to me at 403-617-9123. Fielding calls, and we're kind of open 24 hours right now. So if, you know, it's a lot of worry out there, and we get it. We certainly will guide you in the direction to help you if you need it. So yeah, it's there's a lot of confusion, and things are changing all the time. So happy to help for sure.
Awesome. I'll put contact information when we post these links as well. So excellent. I appreciate that. And I'll maybe try and get you some information on the rumors of non-closings or non-potential closings, and maybe get you some information on the board's view and what some of the lawyers are doing on that, because I'm sure that there's a few of those cases arising.
Yeah, I think it's maybe not here yet, but it's on the horizon, unfortunately.
Yeah, excellent. Good stuff. Appreciate it. Take care.
Okay, thanks guys. Be well. Take care.
Cheers.
Thanks.
All right.